Our Brian Cheung was standing by watching that hearing. And it was quite interesting there, particularly at the end, Brian, because Jay Powell got a lot of questions about the Main Street lending facility and whether money was flowing to small businesses across America that need it.
Yeah, absolutely, Julie. And the real criticism of this Main Street lending program, which the Fed set up a number of months ago, by the way, is that the uptake has been remarkably low. Keep in mind that the Main Street lending program has the ability to lend up to $600 billion into the economy. That's based off of the equity that the Treasury was able to put into it based off of money that was appropriated from the CARES Act. The Federal Reserve saying as of now, only $2 billion of that $600 billion, obviously just a drop in the bucket, has actually gone to those small and medium-sized businesses that the program claimed to help. Now, the problem here is what is the proper role of the Main Street lending program? And I think that's what the real focus of this particular hearing was. If the Main Street lending program is supposed to be a backstop, as in a last resort for these companies to get help, then you might argue that the Federal Reserve would say mission accomplished, that it's okay that the uptake has been low because it means that a lot of these companies and businesses that have been struggling have been able to find credit elsewhere. On the other hand, you have other members of the House Financial Services Committee saying, is the Federal Reserve scared of taking on too much credit risk or worrying that companies might default on these Main Street loans, which might be precluding them from providing more credit? And that's something that is a little bit of a tougher answer for Chairman Powell to answer when you consider that he's been trying to bounce the ball back into Congress's court, saying that it's really fiscal policy that can step up to the plate here. He said, quote, I really do think this is more appropriate for PPP, the Paycheck Protection Program loans, which are in the nature of grants, end quote. And translation is that people might be preferring forgivable loans as opposed to these type of Main Street loans, which do ultimately have to be paid back. Stephen Mnuchin, the Treasury Secretary, is saying for his part, he does support a reauthorization of more PPP funds. But as we know, Julie and Adam, getting a phase 4 deal is something that is very uncertain at this time.
Brian, in regards to what's going on with the banks, Chair Powell actually said smaller banks are going to bear too much of the burden, more exposure to small businesses and real estate. And then he said the Fed will be watching to make regulatory adjustments and supervisory adjustments to help those banks serve their customers. What does that mean? Are they going to loosen lending requirements? What did he mean by that?
Well, the Federal Reserve has already provided temporary changes to certain types of things. One example being the community bank leverage ratio. This is a requirement that the Federal Reserve has on the capital levels at a lot of these community banks. They've lowered that from 9% to 8% just temporarily during this time. It seems like, based off of the answer that you just alluded to, that there could be more wiggle room for the Federal Reserve to provide more regulatory or supervisory relief for these types of institutions. What we do know is that community banks have been quite pivotal in the transmission of a lot of the Federal Reserve's programs. When you look at things like the Main Street program, when you look at things like the Paycheck Protection Program, which was outside of the Fed's purview, although they do have their own liquidity program to backstop loans that were originated under the PPP, a lot of that was done by banks that were under $50 billion. Yes, it's indeed the case that Chase and Wells Fargo and Citigroup, the real giants in this space, have done a lot of underwriting too, but it really has come on these community banks as well. And they've been operating under very difficult environment. When we look at, for example, the yield curve, it's been very flat. That's a very difficult operating environment for banks to make money in. So that's what Chairman Powell was saying in saying that these community banks are really facing a lot of pressure right now, not just on a margin standpoint, but in the demand for credit right now and being able to decide whether or not certain types of risky borrowers, which really looks like everyone right now, to get access to credit. That's something that should be in view. But again, Chairman Powell may be alluding to further action on the regulatory and supervisory front in the near future.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.